Good morning. Uh, Good morning. Buenos dias. Well, welcome to our annual Emerging and MWBE Investment Manager Conference. My name is Wendy Garcia, and I am the Comptroller's Chief Diversity Officer. My position of first in New York City government is to champion diversity across the city. My focus is to ensure that the city uses its financial power, from contracts to investments to the boardroom, to level the playing field for women and people of color. I work every day to keep systemic racism and exclusion outside of the halls of government, and to ensure that this great office works for all of you, to reform the regulations that have historically posed barriers for our communities. Now, as you can imagine, this is no easy task. It can make people very uncomfortable, and it requires us to be honest and take a hard look at ourselves. My job is to continuously ask why, to push the envelope, and aggressively ask, who said? And if those answers negatively impact women and people of color, it is my job to work with Comptroller Scott M. Stringer to get the job done and fix it. Because we know that when women and people of color are not sitting at the table, our economy's sustainability is at risk. Today, all of us have a call to action to take on the responsibility of building a sustainable government that garners a movement which will work for the 80% of women and people of color who live right here in New York City. Because the facts are clear. Women comprise of half of New York City's workforce and contribute to almost $100 billion annually to our economy. So it is time that you, and I'm talking to everyone here in the room, invest in her. And if that doesn't convince you, a recent study done by NAIC showed that diverse-owned firms continuously outperform benchmarks. Therefore, investing in women and people of color is and will be critical to our bottom line. This morning, I have the great honor of introducing a man who truly understands diversity. Most of you already know him as the champion for policies like the $15 minimum wage and affordable housing, and for leading America's first public pension fund to engage in divesting from fossil fuel, because he believes that green investing is the future. But I've gotten to know him for his character, his competence, his honesty, and all behind the cameras. This is a man who doesn't flinch in the face of opposition, and he isn't afraid to stand up to the status quo. He is a watchdog for New Yorkers, a man who scrutinizes government for the people, a leader who follows the facts, the money, and to ensure that every New Yorker gets an honest, open, and responsible government that they deserve. And over the years, there have been many calls from important stakeholders warning Scott that he may be going too far on this diversity thing, and that there just aren't enough women and people of color to fill the spaces that meet our standards. And each time, every single time, I have been able to see up close how much Scott deeply believes in this mission and his unwavering vision for New York City government, to the biggest corporations, to the leadership in our office. He is a true leader, a proud New Yorker, and I am so proud to be able to work with him and share this journey. So without further ado, please put your hands together and help me welcome Comptroller Scott Stringer.
I am so sorry to have to be up here disappointing you, because Wendy could have done the whole thing, right? So I want to first start out by thanking the city's Chief Diversity Officer, and somebody who I have partnered with every step of the way. BAM and the Comptroller's Office would not be doing this national work without her. Give it up for Wendy Garcia, our Chief Diversity Officer. And thank you for that introduction. It means a lot to me. And I want to welcome all of you to our annual Emerging and MWBE Manager Conference. This is a packed house, and it's great to see all of you. I would like to start out first and foremost by thanking all the trustees of the New York City pension funds. They do an amazing job watching the money and partnering with them. And particularly, I want to thank this morning Michael Mulgrew and those representing the UFT, which is generously hosting us today. Thank you, Deborah Penny, Dave Kazansky, and Tom Brown. Give them a round of applause. And we're going to have trustees in and out of here today, but I want to thank Teamsters Larry Bosley and firefighters Liam Gaffoli, who are here today. Give them a round of applause. Your commitment to supporting New York City's retirees and their families is unmatched. Thank you for all your hard work. It means a lot. I also want to thank the amazing staff of the Bureau of Asset Management at the Comptroller's Office who work tirelessly to maximize pension fund growth and on the issues that make a lasting difference across the industry. I want to thank our first Deputy Comptroller, Elena Gilligo, our Chief of Staff, Sasha Owen. I want to thank somebody who has worked with the trustees and has served with me as long as I've been in government. She started with me at a very young age. Our Assistant Comptroller of Pensions, Susanna Vickers. Give her a round of applause for the work she does. And I want to thank all of you for joining us here today from all over the country. Now, this is our 6th annual Emerging and MWB Manager Conference. Each year, this event gives us a chance to take stock, build on our successes, and plan our strategy to deliver strong results for the teachers, firefighters, police officers, and city workers who keep this town moving. From day one, we've been laser focused on the issue of diversity, why it's good for business, why here in New York City, diversity isn't a buzzword, but an airtight commitment. And we've been able to make great progress, not just in New York City, but across the industry, in the boardrooms of the country's largest companies, in the investment portfolio of our pension funds, the 4th largest in the country, and the halls of city government as well. These efforts are being led by our Chief Diversity Officer, Wendy Garcia, our BAM Director of Diversity and Inclusion and Emerging Manager Strategy. Give a round of applause to Siobhan Sutton, the great work that she does. And of course, Alex Dunier, our Chief Investment Officer. He's got this down. Give it up for Alex. And a great human being as well. Now, this all started by someone I have really admired and gotten to know. And she was the beginning and has now set the bar for pension funds around the country. Please welcome Carol Wallace, the city's first ever Chief Diversity Officer, and she's going to join us later to lead a panel on gender diversity. Give her a big round of applause. Thank you, Carol. Now, because of their leadership and the work of everyone in the Comptroller's Office, the pension fund's investments with firms led by women and people of color have grown by 51% since 2014. All while we consistently overshot our baseline return target of 7%. So the hardworking New Yorkers who depend on us can rest assured that we are safeguarding their retirement and the financial security of their families. We've been able to make these strides because each and every year we set new targets and we meet them. Last year at this conference, I set out a goal to allocate 10% of our assets to MWBE firms. I'm proud to say that we hit that goal and even exceeded it in some of our asset classes. And today, we're pushing this goalpost even further to declare a new standard of 12%. We know that by leading with our funds, putting our money where our mouth is, we'll give the best and the brightest in this business a fair chance and set the momentum for everybody else in this country. And that's why I'm proud to announce a groundbreaking new effort to deploy $1.5 billion to early-stage emerging managers, as well as first-time funds, a segment of the market that we are going to expand our engagement in. We're going to target these investments in private equity, real estate, alternative credit, and infrastructure as approved by the boards before the end of the year. Give it up for that, because this is putting money where our mouth is. But many of you know that these systems have already been at work to move the needle, with a $600 million re-up investment to emerging managers, including MWBEs and private equity. It's a new record that is over $100 million more than we initially set out to achieve. And as our numbers continue to climb, we'll also use the institutional knowledge of our office to empower MWBE firms across the country. That's why in 2020, the Bureau of Asset Management will launch a new program to source and engage qualified diverse managers with webinars and workshops throughout the year. It goes to show that when we act, there's a ripple effect that creates an unstoppable wave of change. But I got to tell you, it hasn't always been like this. When we first set out to seek diverse managers, an engine of growth, progress was not the expectation. The conventional wisdom in the industry was that qualified, best-in-class, diverse managers were simply too hard to find. It was like that when we launched our nationwide boardroom accountability project to bring proxy access rights into the boardroom and get a picture of who was sitting around the boardroom table. Companies refused to listen at first. But we said time and time again, diversity matters. Transparency matters. Oversight and independence at the top, it matters. And guess what? As a result of our push for proxy access and boardroom transparency, 62 companies that we invest in have brought on 77 diverse directors to their boardrooms. Twice as many companies are now reporting the diversity of their boardrooms. And proxy access is now in place at over 600 companies. Now, that's an achievement that we're proud of. It can deliver long-term results for the people we ultimately work for at the end of the day, our pensioners. But there is still much to do. As of 2018, just 34% of board members at Fortune 500 companies were women and people of color. When it comes to executive leadership, the data is even more stark. Just 6.6% of Fortune 500 CEOs are women. And the number of men and women of color leading these companies is often in single digits. This will be the subject of today's fireside chat later on. But I want to put it another way, a different way, because we all know this story. Many of you in this room have experienced this story of a young, ambitious person who finds themselves on the elevator to success. They made all the right decisions. First person in their family to go to and graduate from college. Some are presidents of their class. This elevator moves up for them. After school, they land that internship and turn it into the first real job in finance, the kind of job that helps you pay down the college debt and support a young family. And that elevator just keeps moving way up. Sometimes they take a big chance and they find a big opportunity. They hit what, by any standard, is great success, great economic success. But somewhere along the line, that elevator slows down and it stops moving. It's not because they got comfortable or stopped trying. Something else is at play. The elevator never makes it to the C-suite or the boardroom. It just stalls. Well, today, we're launching a new stage of our Boardroom Accountability Project 3.0 to deliver sustainable structural change and ensure that that elevator never gets stuck again. So today, we're calling on companies to adopt the Rooney Rule. You may know it from the NFL, but now we're bringing it to the companies we invest in a big way. We're demanding that they adopt a policy to consider both women and people of color every time they seek to hire a new board member and, get this, a new CEO. Because the fact is, there are brilliant, skilled, and experienced diverse candidates who are on the elevator. Now, they're just stuck between the floors. They have a potential that should be unleashed. And research shows that when you include people from diverse backgrounds in your candidate pool for a leadership position, the whole outlook shifts. It becomes 79 times more likely that you will, in fact, hire a woman. And get this, a staggering 193 times more likely you're going to hire a person of color. So this new standard will force the biggest companies in our country to shake off the stubborn status quo. It's exactly the boost this industry needs if we're going to keep growing. Because as fiduciaries, we want our funds to invest in companies firmly planted in the 21st century, companies that represent the future. We can't do this if companies have leadership teams that they look like they're out of the 1950s Mad Men series. And as I said, we're going to do this not because it's the right thing to do. We're also doing it because it's a smart thing to do. Diversity must be front and center in conversations about wealth creation. It can't just be a box that's checked. It's a living, breathing commitment to empower people who've been fighting with one hand behind their back for far too long. In New York City, we have a singular chance to put diversity and equity at the center of our city's constitution. But it's coming in a much different way. You know how we talked about Carol Wallace and Wendy Garcia as the chief diversity officers? The national success that they have been able to usher in? Well, get this. We took this concept to the City Charter Vision Commission. And we said, wouldn't it be great if we could have the same diversity officer, not just reporting to the controller, but reporting to the mayor? And that's on the ballot. So that means come November, we could have a whole day in this city by modeling the work that we've done and moving it to City Hall. Let me just make that clear, just moving the chief diversity officers to City Hall. So, I don't want you to think we're getting ahead of ourselves. So I want to thank you. So, you know, Susanna's like, time to go. No, but again, I want to thank all of you for attending this year's conference. Many of you I've gotten to know over the years. The respect I have for each and every one of you is truly immense. I respect the work you're in, the industry you're in, and while we try to hold the industry to a high standard, I do recognize that there are people and companies that are already way ahead and have the same vision that we offer today. So this is not my way of saying you have to do something. It's my way of celebrating the work that you already do. And in that regard, I am now pleased, the power vested in me, to, Alex says I get to do this. I am pleased to present the 2019 Controller's Diverse Practitioner Awards. Give them a round of applause. These awards honor firms with diverse leadership who head an inclusive investment organization. As you heard me say earlier, throughout our campaign to center diversity at the Controller's Office, we've heard time and time again that there are so many few diverse firms to choose from. Well, this is our fourth year presenting this award. We've had no trouble finding talented partners to highlight. Partners who share our values, walk the walk, and deliver real results for our funds. These awards are our show of appreciation for the partnership in this mission. So I'm going to call up our first recognition. Please welcome Palladium Equity Partners. I want to recognize Palladium. Palladium was actually part of our Emerging Manager program way back in 2005. We've partnered with them ever since. Last year in 2018, Palladium graduated out of the Emerging Manager program and is continuing to grow each year. Palladium was founded in 1997 as a family-owned and New York City-based private equity firm focused on middle-market companies with over $2 billion in capital across 33 platform investments and with expertise investing in the U.S. Hispanic market. Palladium has been a true partner in our efforts, focusing not only on the diversity of their investment team, but also the boards of directors at their portfolio companies. It is a great pleasure to present Marcos Rodriguez with the 2019 Diverse Practitioners Award from the Comptroller's Office, NYC. Now I'd like to bring up Tina Biles Williams, the founder, CEO, and CIO of FIS Group Incorporated. FIS has been an emerging manager partner of New York City for over 20 years. They are charged with finding and investing in smaller, top-performing investment manager firms, including MWB managers, and supporting them in public equity. FIS isn't just diverse in their investment team. Their business is seeking out the underdogs with the greatest potential. In their fund-of-funds investing, they provide an ecosystem of support to help small new managers succeed. Their work helps form the pipeline of talent that we and so many others rely on every day. And that's what makes them such a great partner for our pension funds. I present to you the coveted Comptroller Award. So, yes, no, I know. It says on the card, they will say something in one, but I can't have Suzanne and Wendy sit together. Siobhan, can we just move them? Marcos, would you like to say something? Okay. Tina, do you want to say? Okay. They didn't give me the order. Okay, Tina, please. I'll hold this for you. So.
Thank you so much. So thank you so much, Comptroller Stringer, CIO, Alex Donier, and the magnificent diversity team, Wendy and Siobhan, and the entire BAM investment team, as well as the trustees of the New York City pension plans for your partnership and trust over these many years. The City of New York was one of, I think, our second investor. Way back in 1999, we were allocated $25 million, and that endorsement actually put us on the map. So you've been transformational for us. Today, we're honored to manage almost $600 million of the retirement system's assets for all five new retirement systems. We believe that diversity is not about how we differ, but rather about embracing and leveraging each other's uniqueness. Moreover, we believe that the inclusion of talented people and firms of all colors, backgrounds, and genders is not only smart, but it's a strategic advantage. These core beliefs date back to the early 1990s, in the dark ages, when I was CIO of the city of Philadelphia. And my consultant at the time, and I had a few, could never seem to find an investment manager that looked like me, gender, race, whatever, driving me to find them on my own. And so I created a pilot program. And because of the success of that pilot program, I mortgaged my home to form the company today and to create a different paradigm. Today, between FIS and our Piedmont subsidiary, we have 45 extraordinarily talented professionals who, I am happy to say, look nothing like the investment industry, but look a lot like this room. In fact, when people come to our office, they often say, this is like the United Nations, with the exception that we are a highly functioning body. And so some of our team is here today, and if they could just stand, because they're as responsible as I am for getting to this award. I also want to thank the investment managers with whom we partner because they also are part of this, of our success. You know, when I started FIS in 1996, then, and relative to that period, the investment industry, in no small part to this man's efforts, has become more inclusive. But we have a long way to go. You just have to look at the research by the Knight Foundation or recently by Stanford University, which documented racial bias among decision makers. It suggests that we need more of you and more people like you. And because diversity is a process and not a destination, and that needs to be structural, ongoing, and systematic. At FIS, one of the ways in which we encourage sort of this systematic inclusion is that we add extra bonus points to the annual bonuses of our manager research professionals if they source and successfully recommend a diverse manager to our investment committee. Nothing like money drives incentives. Many of you know, in the early 2000s, we pivoted to non-US, and at that time there were only a handful, not quite a handful actually, of diverse-owned investment managers of non-US equity products, which is why we created the manager development product where we worked with beta-tested diverse managers offering new products. We created the ecosystem that the controller referenced, which provides operating capital, discounted investment manager services. And so today, of the 43 investment managers of international equity firms that we have partnered with and funded, 70% are minority and women-owned.
All right, thank you very much.
So I want to close by thanking the controller for your commitment, your transformational leadership. It is crucial, and so I hope we can duplicate you across the country.
Thank you. Thank you
All
very
right,
much.
thank you.
Thank you very much. Let's give another round of applause to Tina. That was great. Ready to follow, Marcus?
It's hard to follow.
I know, but try do what you can. Go ahead.
Thank you. Thank you, Control. Thank you. So thank you very much, Controller Springer. Thank you very much to Alex Donier and to the diversity team, Wendy, Siobhan. Thank you to the trustees and all the officers of the Bureau of Asset Management. Once again, I'd like to honor and congratulate Tina for all her great work. And can we have a round of applause for Tina, please? So Controller, with your permission, Wendy said that I could invite some of my team members up to not speak, but to stand with us so she could see the team. And maybe, Tina, we could ask your team members to all come up. Just
Wendy
so
said so.
If Wendy,
Wendy said
so could
Because I wouldn't. No.
So can we ask the FIS and Palladium teams to come up, and is that okay?
I think mine missed their train.
Is that okay?
Yeah, of course.
Come on down. So.
Sure.
So it's always great to talk about it. I think it's always better to show it, to show what we're doing, both in the people and the returns and the results. Alex says that it's about the results, and then we can talk about the results. Is that right, Alex? So, It is very much an honor to stand here with you and with Tina and the team to receive the 2019 New York City Diverse Practitioners Award. Listening to Tina's remarks, we have a lot in common. She started the firm in 1996, mortgaged her house to do it. I started Palladium in 1997, mortgaged the house to do it. Mortgaging the house to do it seems to be part of the theme. And honored to be here and join many of the past recipients for which we hold tremendous respect. And we share the strong commitment to diversity and inclusion. A very special thanks to New York City. Honored to sit here with the flags representing the civil servants in the city of New York. We are sincerely grateful for that partnership. We've been partners with the City of New York in 3 back-to-back institutional funds going back over 15 years. And we admire, truly admire, and thank you for your diversity initiatives over the years. As the controller said, and as you heard from Tina, the New York City Bureau of Asset Management has been a leader in terms of diversity and setting an example for LPs and GPs alike. Diversity is incorporated in part of their due diligence process, their ongoing monitoring process, and it holds managers accountable for their own practices. New York City's activism and commitment to diversity is laying the groundwork for a more equitable and prosperous future. At Palladium, we seek to maintain and strengthen a firm culture where individuals of various backgrounds are recruited, recognized, and valued. Diversity is a formal and key component of the firm's mission statement, which in addition, I gotta go faster. Got it. So, core part of our mission statement, over 70% of our employees are minorities, women, 60% of our senior team is minority and women. And I'm gonna skip right to the third page, Wendy. And getting the hook is I follow directions. And so ultimately, I'll get right to it. A lot of people to thank, a lot of organizations, the Robert Twigo Foundation, SEO, NAIC, NAA, that have all partnered with New York City and with Palladium. Want to thank you, and I'll finish saying that when I started the firm and my kids, who are now in their 20s, were younger and coming into the city, and we would see the firefighters and the police officers and the teachers and the civil servants, I would always say to the kids, and I still tell them now when they're in law school and the U.S. Navy, and my daughter's about to graduate and rule the world, I tell them today that Papi works for the firefighters, the police officers, the teachers, the civil servants of the city of New York. That's my boss, that's Papi's boss. That's who I work for every day. We never forget that. So thank you.
Let's give them one big round of applause. Thank you. So enjoy the conference. Can I introduce him? That's great. This is great. So in my last role here today, there is somebody that I want to introduce. He's someone who doesn't need introduction, but I have to say, this gentleman has taught this city so much about how to manage the 4th largest public pension fund in the United States, the 14th largest in the country. And every time I have sat with him in his role as CIO, there is a calm in the face of a storm. There is a sigh in the ambition that we bring to him, and he has handled it all with smarts, with grace, and with people skills that runs counterintuitive sometime in an industry like this. But he is the best chief investment officer in the country, bar none. And I am so proud to call him a friend and a partner in all the work we do. I will say on behalf of another former controller, who's a little late today, but it's okay. You know, he's a busy man lately. Bill Thompson, give him a round of applause. And, you know, that, you know, when controllers talk to each other, we always call each other, I'm the 44th controller, John Liu's the 43rd controller, Thompson's the 42nd, so we call each other 42 and 43. But when Alex Donier was appointed chief investment officer, all of the living controllers, or most of them, called up confidentially to say, what a great choice, and he's never, ever disappointed. Please give a big round of applause to Alex Donier.
Wow, what an introduction. Follow that up. I was also told that I need to make up time, which for those who know me, that is no small feat. I will give it my best effort, Wendy. Well, first of all, it's so great to see all of you here this morning. Thank you once again for attending. Thank you for your partnership once again to FIS and Palladium Equity Partners. We thank you. Once again, here we go. Went one too far. Well, good morning. And on behalf of Comptroller Scott Stringer, our pension board trustees, the dedicated staff at BAM, the Bureau of Asset Management, I also would like to welcome you all to our annual Emerging and MWBE Manager Conference. First, again, I'd like to thank the Comptroller for your extraordinary leadership and for all of your great accomplishments leading this office over the last 6 years. Comptroller Stringer has been unrelenting in his focus to not only promote responsible business practices at corporate boards globally, but also drive robust diversity initiatives, both at BAM and throughout all the departments of the Comptroller's office citywide. And he's grown and done all of this protecting the retirement benefits of over 730,000 beneficiaries while delivering well above 7%, above our 7% target returns. And you know, he's nowhere near done yet. So thank you, Mr. Comptroller. Yes, please. I'd also like to thank the UFT, President Michael Mulgrew, the teachers' trustees that I see before me for hosting us once again at this great venue. I'm so excited to be back. I've always said it, I mean it sincerely. I love this building, I love this place. I feel at home here, so thank you for hosting us once again. And again, to our pension board trustees, the other four systems, for all the hard work and time and effort that you put in supporting your pension fund beneficiaries. Now, I'd also like to acknowledge how honored and excited I am to stand before you this morning. You'll recall last October when I addressed many of you and addressed this conference, I did it as the interim CIO, and today I stand before you as the CIO. Thank you. I was going to say, as a CIO of not only the greatest pension system in the world, but of the greatest city on the planet. So thank you again, Mr. Comptroller, for the trust you've placed in me in this position. I take this responsibility incredibly seriously, and I'm fortunate and grateful to be surrounded and supported by a highly talented and experienced and dedicated group of professionals at BAM who come to work each and every day, give 120% to achieve our collective objectives. And to help me lead this team, I created the Office of the CIO. It includes Michael Haddad, right there, Michael, our Deputy CIO, and Kara Schnabber, our Chief Strategic Planning Officer. Thank you both for your partnership. So I'll be sharing with you a few details on the current state of the New York City pension funds and outline some of our priorities and initiatives. At the end of our fiscal year, which just ended on June 30th of 2019, the AUM of the 5 plans totaled $208 billion. Each plan, as a reminder, has their own general consultant, and there are various alternative asset consultants that represent multiple plans. You'll have the opportunity to meet them later on in this morning's program. Now, except for short-term investments, all of our plan assets are managed externally, some of which are managed by many of you here in the room today. Asset allocation and manager selection are recommended by both BAM and our consultants, and generally require the approval of the board. Now, here on this slide, you'll see on the far right-hand side the returns for the fiscal year. We are very proud of these results, particularly in light of the volatility the markets experienced during this time frame. And if you were to look back, let's say 3 years, or even to the beginning of the Comptroller's administration in January of 2014, we have generated strong returns that have exceeded both our benchmarks and our target 7% rate of return. And we thank all of our managers for this achievement. Now, here on this chart, you can see the strong and steady growth of our AUM since the global financial crisis, from $86 billion in June of 2009 to the $208 billion where we stand today. Yes, thank you. We'll take it. We like this chart. Now, the task is to continue have it going up and to the right. Now, although we've enjoyed strong returns for many years, clearly you can see it here, we are very aware of the potential downside to the markets, and so we're very concerned about that. And we are preparing for a period of higher volatility and lower returns, as we've witnessed at the beginning of this fiscal year and also just the beginning of the 2 weeks of the fourth quarter. So as a result, we will continue to take a more defensive position with our investments as we look to de-risk the portfolio where appropriate. In addition, given this change in market expectations, we have launched and have underway a new strategic asset allocation study that we expect to complete by the end of the year. Now, this is a busy slide, but what we try to do here is to show you a snapshot of the portfolio broken out into all the major categories of our asset allocation. Now, we maintain a strategic approach to investing with a long-term view. And as such, it is important for us to be diversified across asset classes and geographies to take advantage of market trends and tactical shifts, and shift tactically, I should say, when warranted. As you can see, the top green here, we have growth assets, obviously equities, both public and private, alternative credit, non-core real estate, and hedge funds, among others, representing $142 billion of assets, and the largest part of the portfolio, 68% of the portfolio. We have in the red deflation hedging assets. Those are treasuries, mortgages, investment-grade credit at $45 billion of AUM, or 22% of the portfolio. And of course, we have assets that provide inflation protection, TIPS, core real estate, bank loans, and infrastructure. $21 billion of AUM, about 10% of the plan. Now, in our breakout sessions later this morning and early afternoon, you will hear from our asset classes and consultants on specific areas of interest that we have and manager opportunities, which I know is why you're all here. Is that correct? Now here, what we try to do is just break down our assets by the type of managers we partner with a focus on emerging and diverse managers. These figures, and all the figures actually on these slides, are as of the fiscal year that just ended June 30th. Now, we are proud to be able to continue to grow the allocation to small and diverse managers. On this graphic, we focus on actively managed assets, as our portfolio, passive portfolio, is primarily index managers. Globally, we have over $17 billion of the plan's AUM, which is 12% of actively managed assets with small and diverse firms. And we are very proud of that statistic. And we continue to work diligently, consistent with our fiduciary obligations, to build on that success. Now, honing in on diverse managers, you see the breakdown that was referenced in earlier by the comptroller. Here we're showing the percentage of U.S. actively managed assets that are managed by MWBE managers. And again, I'm excited to state that we continue to grow our allocations to diverse managers. Today, over $13 billion, or 10.8% of U.S. actively managed assets are managed by MWBEs. And we're very proud of that. We have a high allocation to MWBEs in infrastructure, public equity, and private equity, as you can see. But we do have work to do in some of the other asset classes, and we're doing just that. And later in this presentation, I will discuss the strategies that we're pursuing to increase allocations to diverse managers across all asset classes. Now, BAM also has an MWD BVE program, brokerage program. That's a mouthful. But honestly, this program is very important to us. We encourage investment managers with whom we invest to attain certain goals with MWBE brokers. Through this initiative, BAM seeks to provide opportunities for brokers to execute trades on behalf of the system's investment managers using the latest technology and best execution. This program commenced in July of 2008, and we currently have 14 active broker-dealers. And you can see that our trading volumes goals are listed by strategy. Now, we're proud to have exceeded our goals in nearly all categories. And with the addition and expansion to include disabled veteran-owned firms, we will exceed our goals in government bonds as well. So economically targeted investments, or ETIs, that's 2% of the pension plan. Currently 1.57 or 2.8 billion is currently invested. As many of you know, this portfolio has historically targeted affordable and workforce housing for low, moderate, and middle income neighborhoods in New York City. But it is not limited to just that. And there is the ability to make investments in other projects that benefit these neighborhoods. Corporate governance, also, as you heard earlier this morning, has always been a primary focus of the comptroller and the Bureau of Asset Management. Through our corporate governance group, Mike Garland, I think I saw him here this morning, who leads the group. Through Mike's leadership, this office engages public companies directly to protect and create long-term shareholder value. We are focused on advocating for regulatory reforms and promoting responsible and sustainable business practices. The New York City pension funds are among the most active proponents of share owner proposals. We voted on over 126,000 ballot items at over 13,000 global annual and special meetings in the last fiscal year. I literally had that number double-checked. I was astounded by all the work that the corporate governance team puts out. So thank you for that. Yes. So now let me turn to some of the exciting new initiatives we're focused on, some of which you already have heard this morning. First and foremost, as fiduciaries, our primary focus is to maximize risk-adjusted returns. Now, one very important project that is occupying a lot of our times at BAM is working closely with our consultants on our new strategic asset allocation, as I previously mentioned. And we expect to have that completed before year end. We also continuously work to develop and strengthen our staff. We have recently added some new senior members to the investment team, and you will have an opportunity to meet and hear from them at the breakout sessions later today. We're also working with our boards to broaden our investment capabilities. And that goes from expanding the geographic regions that we invest in to developing co-investment platforms in private equity and in real estate. So stay tuned for those initiatives as we finalize those over the next several months. We're also continuously improving our operations and risk management capabilities by leveraging technology and upgrading our systems. And we are always continuing to work on devising new strategies to expand engagements with and allocations to diverse investment managers. Let me drill down a little bit on that. So what are we doing to increase our allocations to MWBEs and diverse managers? As you heard from the comptroller, we are incredibly excited to announce our new initiative to allocate $1.5 billion. And I want to say that again, $1.5 billion. And that initiative will be targeted to first-time funds and early-stage managers in private equity, real estate, alternative credit, and infrastructure. As we looked at our portfolios and examined ourselves, we saw we had a white space in that area. You know, we weren't allocating a lot of capital to the new and next fund managers. So this program, this initiative, is dedicated to do just that. We are currently finalizing those investment partnerships. I think I see some of the managers in the room. We can't say who they are, but let's close those agreements soon. But I'm hoping to formally launch that before year end, so stay tuned as well for an official announcement and press release from our office. Now, in public markets, we're also broadening our manager search criteria. We are very focused on expanding the number of top-performing, diverse investment managers in our searches. And as I've mentioned, we've expanded our MWBE broker program to include disabled veteran firms, and we've added high yield as an asset class. Now, through the Office of Diversity and Inclusion, and under the leadership of Siobhan Sutton, we are proactively working to increase the number of small and diverse managers that are transitioned to direct allocations. As you heard this morning, Palladium was an emerging manager, which now has received a direct allocation from New York City in the last fund they just raised. So we want more Palladiums, more FISs throughout the entire portfolio. Corporate governance. So again, corporate governance, we're looking to build on our boardroom accountability project, where in direct response to New York City share owner proposals, we now have 41 companies that have enhanced disclosure with respect to skills, experience, and diversity, including race and gender, of their board of directors. Furthermore, and you look at that last bullet point, there are now 45 companies in the Fortune 100 that disclose their board members' race. And that's double what it was 3 years ago. And we look forward to seeing that number climb. And as you heard from the comptroller, we're excited to announce the 3.0 stage of our boardroom accountability project, which is calling on companies to adopt the Rooney Rule, not only for new board members, but most importantly, or I would say the new aspect of that certainly is for their CEO searches. Now, that request that the Rooney Rule be extended to CEO searches is a first. And I am proud that our office continues to be a leader in leveling the playing field. Now, climate change. Climate change is also a subject matter that is very important to all of us at the Bureau of Asset Management and our pension board trustees. The comptroller, as you know, have heard in all of his remarks, appearances, speeches, et cetera, it has been a leader, unrelentless leader on climate action. And BAM continues to work to not only meet, but exceed the goal that he has set for us to double the dollars invested in climate change solutions to $4 billion, or 2% of the pension plan assets by 2021. The investment teams across all asset classes are working diligently with our consultants in identifying and sourcing prudent investments that both meet our return expectations and our climate change objectives. Lastly, we are finalizing the search for a consultant to assist the systems in devising a strategy for potentially divesting from fossil fuel reserve owners. Yes, very important. That is a priority of our office, and that consultant, will be hired before the end of the year. So, to wrap it up, as you can see, and I've certainly heard this morning, we are quite busy on multiple fronts, and there's so much, I believe, to be excited about in 2020 and beyond. But we cannot achieve any of this on our own. It truly is a collaborative effort amongst the comptroller, trustees, BAM staff, consultants, and most importantly, all of you. our existing and prospective investment managers. So thank you for your partnership and continued success to each of you and your firms in delivering strong returns, always at modest fees. But definitely, as Marco said, returns, returns, returns. Thank you. As I look at Marco's here, Marco knows what I'm saying. And just want to close by just extending some special thanks to Elena Gilligo, our first Deputy Comptroller. Thank you for your leadership. Also, thank you to Susanna Vickers, our Assistant Comptroller for Pensions and Designated Trustee, Wendy Garcia, our Chief Diversity Officer, the entire staff at the Bureau of Asset Management, who I see here, who are critical to making this all work. For all of your hard work and tireless efforts, thank you all. To the conference planning team, you really have outdone yourselves this year. So thank you so much. Thank you all. I hope you enjoyed this conference, that it's productive and constructive for all of you. And with that, I will turn it to Siobhan Sutton, our Director of Diversity and Inclusion and Emerging Manager Strategy, for some remarks. Thank you again.
Good morning, everybody. Sorry. Y'all can do better than that. Come on. Good morning. It is Friday. Let's go. Let's go. I'm parched. Good morning. I want to thank the Comptroller, Scott Stringer, the trustees of the 5 New York City retirement systems, BAM staff, and all of you for joining us today. What a year. What a year. A year ago, I stood before you, a sea of new faces, and introduced myself as the first ever to hold my position in BAM, reporting to the CIO. I was fresh-faced and uncharacteristically nervous, but no less fired up to bring my investment experience to bear in helping to execute the Comptroller's vision for emerging managers. Today, I look out at so many now familiar faces whose stories and challenges and triumphs I know a little too well, but like the award-winning equity manager who shared their story about fundraising challenges, which enabled our office to support them and help them get traction with manager of managers, or the alternative credit manager who faced challenges navigating our system, and we were able to help facilitate a meeting so that they can tell their story, or even the fixed income manager who was able to compete in a search because our office expanded our manager search criteria. These are the very stories that help us to continue to do this work and to improve. Now, last year at this conference, the Comptroller Scott Stringer committed that we would improve the way BAM communicates directly with you, enhance the monitoring and tracking of emerging and MWBEs, expand existing programs designed to utilize more small and diverse managers, broaden the MWBE broker program to include disabled veterans and high yield, and ensure that consultants are doing more around due diligence of small and diverse managers. Over the past year, we've refined our open door policy, creating a structure for more efficient communication and actionable feedback from us, improved our data collection and reporting, recognizing that in order to achieve our goals, we have to know where we are. We've developed new creative strategies to better and more strategically engage our emerging manager of manager partners in public markets, and expanded manager search criteria to ensure that we are not inadvertently locking out top-performing small and diverse managers in our search processes. We are also seeing steady improvement towards small and diverse managers representing an even larger share of our total allocation, as Alex walked you through earlier, and more and small diverse managers being transitioned to direct allocations. But biggest of all, my office was intimately and strategically involved with our CIO and the BAM investment staff in sourcing the partners for our efforts to deploy the $1.5 billion in capital that we discussed for first-time managers. That's exciting stuff, so I'm really proud of that. Now, building a formidable foundation for change in this industry is really, really hard. But it takes being in the room and asking the right questions. We are laying that foundation to make change across the industry, but we need your continued help. You are all skilled master builders, and we need you to continue building. So please keep communicating, keep fighting, and not just for your own progress, which is nice, but for all in the entire system to do well and do better. We're right there with you in that fight. So on behalf of our team, I welcome you again and wish you a great conference today. Thank you so much. Now I would like to bring up Susanna Vickers, the Assistant Comptroller to our pension systems. She's the Comptroller's designated trustee to the New York City retirement systems. She oversees the unit that produces and distributes trustee and external communications and advises on investment meeting agendas and the development of trustee education programs. Please give a warm welcome to Susanna Vickers, who will be the moderator of this next panel. Thank you so much.
On? Great. Well, as Siobhan said, I'm Susanna Vickers. Thank you all for coming to the conference today. I'm really excited to be joined by three amazing women whose work has been extremely impactful in supporting advances in diversity and inclusion in the asset management field. Please welcome Esther Aguilera, is President and CEO of the Latino Corporate Directors Association. In this role, she brings together accomplished executives at the highest levels of corporate governance to advance diversity in the boardroom. She is recognized as a social entrepreneur and turnaround specialist, leading scale-up innovative change and managing high-performance teams. Susan So joined Sightway Capital in 2017 as Chief of Strategy and Capital Development to lead the growth initiative and fundraising efforts. She is responsible for overseeing the marketing process and leading the team in business development. She is an active board member of AIM. Kara Wallace is the founder and CEO of Optimized Diversity Solutions, a strategic advisory firm delivering disruptive solutions that increase the utilization of minority and women-owned businesses and drives transparency and accountability through diversity and inclusion. Welcome.
Good morning.
Well, let's get right to it. I'm sure we're going to have a lively discussion. As has been mentioned already today, there are lots of statistics floating around about diversity and inclusion. And, you know, it paints a complex picture. According to a recent ISS Analytics report, as of May 2019, of the largest 3,000 public companies, women represent 19% of board seats, more than doubling since 2008. 45% of new board additions are filled by women, compared to 12% in 2018. However, while ethnic diversity also reached record highs, it has grown at a much slower pace, with approximately 10% of Russell 3000 directors currently belonging to an ethnic minority group. Now, while we're here to talk about taking a seat at the table, the importance and impact of participation of women in decision-making positions in finance. As women of color who have taken a seat at various tables, tell me, how hard was it for you to get there, to get that seat? How hard is it to keep the seat, and was it worth it?
Well, I can start. First, I want to thank the comptroller for today's announcement and the significance of it. We are the Latino Corporate Directors Association, has been around for only a little over 3 years. And we were formed to be part of the solution, because people would say, well, we can't find Latinos for the boardroom. And so our focus is our membership, our sitting directors, and we also have C-suite level executives who were priming and positioning for the boardroom. And so the announcement today, there has been some good progress to put this issue on the map. And the way that happened was through efforts such as the Comptroller's Office. When you come to the table with 208 billion with a B to the table, the way we've been able to finally break open some seats in the boardroom is with that type of effort. We're part of a coalition of other treasurers and investment funds around the country to move the needle on diversity. And we're seeing some of those numbers, as you had mentioned. So it's a good start. I think there's been some progress. I see some opportunities that we can talk about and what comes next. And clearly what we're showing, based on your question, is there is tremendous talent. There is no excuse. There is talent. And, but it has taken funds like these to put it on the map. And the messaging, I don't think that it's getting across as well, is the funds represent civil servants. It represents people in this room, people in the city that are diverse, that are stakeholders in these companies. And sometimes people don't remember that we're stakeholders through you all investing and having those types of returns. So leveraging that 208 billion for something that makes business sense, it builds sustainable businesses, and it's good for shareholders, it's good for the pensioners. So one, I wanted to congratulate the office and the team for the announcement and expanding it to the C-suite. Thank you.
Thank you, Esther.
I would reiterate many of the same comments. Thank you, and thank you all for also allowing us to be here and share a little bit of our insights. As a board member of AIM, which is actually the Association of Asian American Investment Managers, in case you didn't know what it stood for, obviously all of this is very important to us. Sometimes we don't qualify as emerging managers, actually, or even minorities anymore. So for us, that's always an issue that we deal with. But to your question directly about being a woman and is it worth it? How did you have to get there to get to the C-suite? For me, I actually started out as an attorney. I was a reformed attorney for practiced for a year. Knew immediately that was not right for me. Then I became a banker with Bear Stearns, which is no longer in existence. I went there because I thought it would be a real meritocracy. And as a woman, back then, which is the early 90s, I went to Harvard Law School, I went to Yale, so I did everything my Asian parents said I had to do. And then I quit law, which they were shocked at, to say I'm going to be a banker. I mention all this because a lot of the things that I've done over time have helped me to get to where I am today. Being a banker, also loved it, found that it wasn't necessarily the right fit for myself. And as an Asian American woman at the time, I had a lot of male bankers tell me, you're not going to make it. You're too nice. Find something else. But I loved what I did. So I ended up moving over to the investment side, which I also loved. I would say that being opportunistic at that time in an early age and also seeking out mentors helped me. But ultimately, I had to ask. And I found that with a lot of my women friends, Asian American friends, it's not just working hard, it's actually finding the right opportunities, asking for that. My title at Sightway Capital, which is part of Two Sigma, we're actually the private investment unit. We've been around for 10 years. I actually asked for the title. There was no such title when I was interviewing with them. They said, we want a family office marketer who could expand our business. This wasn't part of my background, but I helped to build Perella Weinberg Partners asset management business for 11 years before I joined Two Sigma. And I said, it's time for me to now ask, right? I mean, I was a partner there, but I didn't have a C title. I was on the investment committee, still didn't have a C title. So when I started looking for the next place, I said, I think it's time I demand that C title, and you can make one for me. You can call me the Chief Strategic Officer or the Chief of Capital Development, but it has to have a C. and I need to have a seat at the table. And so I asked for it. They could have said no, and I could have walked away. But I love where I am now. It's fantastic. The other thing, in the investment community, though, I don't know if most folks know this, but at AIM, we actually did a similar panel recently. Less than 2% of fund assets are managed by women. And then when you look at the number of women on the investment committee, whether part of a fund or a firm, it's also very small. So everything that we're talking about today, I think, is fantastic. We have a lot more to go, but you got to ask, and you have to have a great support network and build that network, which is why organizations like AIM, Latinos, all these other organizations are critical.
Thank you.
Okay, so just quickly, is it hard? No harder than anything else. And I would tell you, sometimes there's women privilege, to tell you the truth. You just, to your point, be in the right place with the right leaders. From the time I've been in this work, coming to a place, and it's great to be home here with the comptroller. Right leaders get it,
Yes.
and they put you at the table, and they put you in the room. Scott Stringer, when he hired me, didn't say, hey, go be diversity officer, create this little office in the corner. He put me at the senior table, and it worked. And as long as I got there and did my work and worked as hard as everybody else in the room, then we were able to make things happen. So 20 years ago, 30 years ago, probably was a little harder. Now, as I look around the room, see all these women, but more important, I see all these men with daughters who they've now put through school,
Right.
who want to see them at the table. So they're advocates for it too. Is it going to take a little bit longer? Yes, because guess what? We women are just catching up. We weren't in school in the same classes. Nobody told us early on, during my period of coming up. But this next generation, we're going to see more. So let's not hide or keep that, oh, it's too hard, or it's still hard, because it really doesn't have to be. No, there are not enough of us, but it's happening. It's coming. Look around the room. I smile when I see Pat Zoller, one of the sharpest women, on Wall Street, and look what she's managing, and look what's happening, So there are the examples that are out there. It's happening.
Well, that's very inspiring. So maybe it's about, sort of pushing a little bit further to, past let's make it happen to, how can we make it happen better and faster. To that note, the controller announced our initiative around the Rooney Rule, and that really applies to public companies. A lot of managers here today invest in private companies. So a question, to the panel is how can we extend some of these initiatives to private companies, and what advice would you give managers for thinking about diversity and inclusion in the portfolio companies that they own and invest in?
So I'll take that first because it's one word. It starts with data. And I am a big fan of the Rabin Group and what they're doing, especially with consultants asking for data. And all of the consultants should answer those questions. And don't look at a moment in time. I think Victor Heim says it best with his introspection way of doing things. Look at trends. And, so what if you were bad and it was all white males, last year? If this year you add 2 women, then you add a person of color, you're moving in the right direction. And that's what we should be judging you on. So you have to start with data. And, once you do that for these portfolio companies and others, again, you men want to see your daughters do well, So you're not it's not going to look the same. But you have to measure. What gets measured gets managed.
I would add, data absolutely is critical, but what if your data doesn't show well, right? There's no question that the data is getting better. At least I can only speak from the investment management perspective. I was at a hedge fund and private equity. And I will tell you from a lot of the managers' perspective, if we don't hear it from allocators, from public plan allocators, endowments and foundations, folks we are seeking to manage capital for, that this is important and the data doesn't show well. So what are you doing about that? That makes a portfolio manager or management team think, you're right, I don't have enough diversity. I should take that into account as I continue to add, whether it's at the junior levels or at the senior levels. And I've been doing this for quite some time now. I won't say which firms have been better or worse.
Yeah.
For sure, they can all be better, and they have definitely acknowledged internally, we need more women. We need more women at the junior levels, and we need to be able to maintain women and develop them so that we can report this information, because it is important to report it, but where it shows better, right? Because this is important. So that's one way, whether it's through your RFPs or through your consultants, your advisors, telling them that this is important. Again, that goes to the money aspect, right? Well, if you don't actually disclose or you don't show well and it's not important to you, I'm not going to allocate to you. And that ultimately will affect portfolio managers and firms.
Right. And I know that asking is important because as a trustee of the pension funds, I ask those questions when managers come before us and the slide is shown with the smiling faces of the investment team. You know, it's worth asking, if they're not diverse, why not? And what is the plan to get there? Esther?
Thank you, and thanks for that question, because as we know, there is an increasing number of privately owned and private companies that obviously private equity plays a big role. The numbers that are held privately are growing. Not all of them are going public as much. Clearly, there's a lot of public companies. So we also, in coalition with other investment and treasurers and pension funds around the country, have started to engage private equity about what they're doing with their portfolio companies and their boards. Clearly, I think we're preaching to the choir here. We had a first-time session last year with large private equity that clearly in their staffing and their investment could do better and have a long way to go. So we had a session with Carlyle, KKR, Blackstone, TPG, so that for the first time they are starting to look at their portfolio companies and what the boardroom makeup looks like. And there's also a conversation that started with the LPs and pension funds and investors are chiming in and telling the large private equity that we want to see you all also diversify your boardroom, clearly your staff, etc. So again, this room is, you're probably, in the right direction. Clearly you're here. We also need to be having this conversation with everybody else.
Well, speaking to that, having it with everyone else, we know across the river we got a new governor, new treasurer. They had the wherewithal to send that treasurer to sit with Alex Donier and learn from and get best practices. So I do commend New York City on continuing to be the leader and the willingness to take the time to speak with and teach what we've learned and teach those best practices.
Well, I can't thank Kara enough because that's a perfect segue to my next question about best practices. So in California, recent regulation in California and elsewhere is mandating a certain percentage of women on board seats within their jurisdictions. As you travel the country, what other best practices? There's regulation, there are some sort of softer approaches. What best practices have you found that you can advise people that you work with in terms of retaining women that are hired and also recruiting new women to these high-level seats?
Well, we can start with some of the data and numbers because that's important. I think, as I mentioned at the beginning, these efforts, clearly there's a momentum. We never used to see articles in the Wall Street Journal and Post and across the country talking about the boardroom and who's in the boardroom. So clearly that conversation has started. We have made initial gains for women. We clearly need a lot more. but we also want to break down the data in terms of how our women of color are doing, and break it down further. You cited a McKinsey study that looked at the C-suite, and what we know is we actually have men start out at 50% of the workforce, and white men are 36%, for example, of the entry-level jobs at about 280 companies that they surveyed. By the end of that pipeline, or the elevator, as the comptroller said, white men started at 36%, and then in the C-suite, they're 68%. Versus women and women of color that started at 48%, and women of color start out at 17% of that workforce and 4% of the C-suite. So in terms of best practices, this study did a real deep dive to also interview the women and find out more about sort of what's working, what's not, and what's missing. So I think that there's some good information there. But the study has been done 4 years, and there's still not enough progress in that C-suite. So I think there are some companies that are kind of trendsetters, and we can go into that. In terms of legislative work, I do think the legislation to put this on the radar is important. I also want to call out Illinois, because one of the, Illinois passed actually the governor signed a bill to have more disclosure. I think, again, what gets measured gets results. And the bottom line is, it's really hard to track women of color because companies aren't required to disclose that data. And until we do, it's going to be harder to move the needle. So, as I said, we've made some good progress to advance women in the boardroom, but the number of women of color is not where it needs to be, and the number of Latinas is only 1% of company seats in the Fortune 1000. So great progress, we're putting attention to it, there's opportunity to do more. Some of the disclosure efforts are very, very needed. We can't get to the next step with our people of color without it.
Yes, and if I could just add one little piece, because a few weeks back I was out in Laguna where John Rogers, Melody Hobson, Aereo does a great Black corporate directors event out there. And so part of the issue and what they're addressing there is when people do get into that boardroom, when that woman is in that boardroom, is she advocating and making sure she's asking the right question, asking for that data, and when that data comes back, what are they doing with it? And they've been very great about educating those that get to those seats about asking the right questions, because once you get to the seat, it's not enough for you to be in the room. You have to do for others. And for those with portfolio companies, all of the private equity folks, it's incumbent on you to do the same and set those expectations. Again, it's not, don't just put one there and tell them to go sit in the corner. They have to take action.
I think that's actually a great point, right? You don't want to be the token woman on a board that's all white. So, but I would say the fact that this is a topic that a lot of, definitely has had increased visibility is fantastic. And the more we talk about it, the better, but there needs to be more progress. And so, when we do travel, and it's not just in the US, I would say globally, not to cite statistics, but actually there are 59 countries ahead of the US that have named either a female president or prime minister. We still haven't done that yet, right? So we are way behind when it comes to globally, but since we are primarily in the US, we can focus on all the great strides that need to be done here. And so absolutely, Illinois and other states have now mandated legislation, certainly with the Rooney Rule, with California mandating one female board member by 2019 for every public company. To 2021, it becomes 3. You get a fine if you don't do that. So more states doing that, that's actually positive. But you need to make sure if you are one of the women that gets the seat, that you are actually impactful and you continue to set the stage. Those are things we can do individually. Other things, which I mentioned earlier, that we have seen public plans do with their RFPs. In LaSera, there was an article where John Grable actually has spent a lot more time with his staff, now within the RFPs, asking folks to disclose not just the percentage of the gender, right, male versus female, or race, also compensation brackets for each piece, so much more. And then also to sort of also if there's been any ill will or sexual harassment, they also have to disclose that, because then that may impact whether or not they want to allocate to you or invest with you, right? And so the more states that do that, the better this becomes. It becomes more visible. But I also have now seen that more, we wouldn't call them self-help groups, but networks, right? Private Equity Women Investment Network. We've done with Alternative Investment Forum, we have a women's investment network. The hedge fund business has had what used to be called 100 Women in Hedge Funds, or now 100 Women in Finance, all advocating on how we can get more board seats. So definitely it is a topic. The access, I think, is still very hard, and then how do you have impact? I've spoken to a lot of senior female women who say, I don't really have time to join a board because it's hard enough managing a C-suite position. So when I do choose the firm I'm going to be a board member on, I actually look for other women. But that's going to be very hard if right now all these board seats don't have that diversity, right?
Well, so let's talk a little bit more about that. What are the obstacles? We've talked about some good solutions, some good case studies of what jurisdictions or specific companies are doing. What are the obstacles to getting more women in these seats?
Well, two, right? We don't have, the pipeline still continues not to be as strong, and then the retention, which I'd love for us to talk about. But certainly, women who, actually, I think I can't remember which of you had quoted this on it. We did a little prep call, which was great, and we talked about the number of women with MBAs now is higher than it's ever been, yet at senior level, it continues to be quite small. So what is happening to all the women who have MBAs? You know, many of them, if they choose to have a family and choose to stay home or switch careers, by the time they want to come back, that same position isn't necessarily there for them, right? So they never get to that point where they can actually stay in that position or be considered for a board seat. So that becomes an obstacle. There are programs like returnship programs that some investment banks started. Goldman was the first to do this in 2008. But they're not that effective. I would say because of the obstacles, also lack of flexible work hours, that increasingly firms are doing, whether it's not just maternity leave, it's paternity leave or family leave. Being able to be more supportive of family, whether it's a woman or a man, actually seems to be helping. And I think that's a really important part because who says that a woman has to be one that stays at home after you have a child? It could be the father or your partner. But firms need to be supportive of that to allow you to continue with your career. And that's really important. And if you're not at a firm that has that, either you need to try to push for it or go to a firm that does have that.
Right. I think that flexibility is what I've heard before. That's so key for retaining qualified, family-friendly, either males or females.
Yeah. The one thing I was going to add, again, the power of this room is what's so beautiful. If you take our private equity guys and you look at their portfolio companies, if all of them were deliberate about saying, hey, you know what, in these next 6 months, I'm going to go find a woman to put on the board. All of us went to these great schools. All of us have incredible networks. You private equity folks could find somebody to put on one of your portfolio company boards and actually probably make recommendations for the C-suite in those companies. It's just a matter of your effort and your willingness to do it. You know what? And if you're a little busy men, ask your wives. And wives, you know, because we have some sharp friends. And women, ask your husbands. You know, because all of you sitting in this room are at the table. That's why you're in this room. It's not that hard. All we have to do is be deliberate about it, and we can affect change.
I think Kara just threw out a challenge that we're going to be discussing next year to see if people are rising to it.
I completely agree. And if we're talking about the C-suite, just going back to the McKinsey study, it did find that women are ambitious. In fact, we partnered with them to look at their data and tailor it down to how Latinas are doing. And they're very, they want to move up. And it's really more some of the mentoring and sponsoring and manager opportunities along the way. Sometimes the managers, I've just been hearing stories. I was in this region a couple of weeks ago with a group of that are titled the Most Powerful Latinas. This is announced every year by Alpha. And if you look in that room, wow, we have amazing talent in corporate America, in finance, and they want to move up. And the stories I heard was, little things that managers do. Well, the guy asked to speak, and he's got a counterpart that's a woman, and because she didn't, she kept trying to figure out, well, am I not doing something right? Why am I not speaking? But first, she needs to speak up. And second, the managers, they're oblivious to this stuff. So there's little things along the way. So I do think there's women that are capable and want to do more. It's what the supports are. On the boardroom, first of all, there is supply. There's supply of women of color, of Latinas, and men of color. Let's not forget our men, because we are seeing, that's right, it's true. Diversity is gender, race, ethnicity, and while we have a long way to go to get women on the board, I've seen, and I have the data, Latinas are 1%, they haven't changed in 10 years. Latinos only changed a little bit. African American men, okay, Latinas went up 0.1% in 10 years, and African American men 0.2%. Latinos 0.3%. Glacial, okay, in the last 10 years. So what I'm saying is this push for diversity, again, we need more gender in the room, but we also need to look at race, ethnicity brings another lens that needs to be part of that equation. There's supply. Yes, we still need more in the pipeline, but that's not an excuse. And if you all in your private equity and the companies you invest, if you're looking for diverse talent, we work and source, leverage our membership to find you the talent. So we're happy to help.
Great. So, super fast last question. But I would be remiss if I didn't bring up sexual harassment. I know that it's a topic that trustees of the New York City pension funds have been asking managers about. It's a risk that people are beginning to really recognize that if policies aren't properly implemented to create positive work environments, that it could lead to toxic and other really bad outcomes. In terms of creating that positive environment, what do you think are strategies for companies to address the risk of sexual harassment? Should we just put a lot more women on boards and in positions of power? Would that do something to reduce these incidences?
Actually, I'd said I wasn't going to touch this question, but actually, honestly, internally, have more training programs, because it can, yes, it's usually, sexual harassment directed towards a woman, but it can be the opposite, for sure, especially in small business, small private companies. So having sexual harassment training programs internally, or hostile work environment, maybe that's a better term, training sessions is actually critical. And every single organization should have those. And that can be helpful, because little things like, you look great in your tie today, that's actually viewed as hostile. It can be viewed as sexual harassment, even though I think it may not be, actually, I know it's not appropriate, but someone else may say, I didn't see what was wrong with that. And the reality is, the more you talk about it, the more sensitized you are to it, it can help create a better environment. But there are also other things that you can do.
And it is education, but I think we've gone too far, quite frankly. And let's be real about this. For those of us who are a little bit more senior, we came up in the 80s. I grew up in LA, in Hollywood. So, you know, I mean, so there were just some norms, and it was okay to play. It was okay to drink after, to have relationships in the workplace, and now it's not, you know, and now people have taken it too far, and it's made it uncomfortable, and quite frankly, I feel it could actually hurt women in the workplace because people aren't really addressing it, they're just kind of staying away from it. So I think it should be addressed. I think you have to look at, again, trends, look at environments. You know, what happened 10 and 20 years ago when the rules were different, you know, if you're going back and still holding people accountable for that, or firms accountable when there's differences here, you know, it's a case-by-case kind of thing. It should be talked about, but let's not go overboard anymore. It's just too much.
Well,
It's just, thank you for that. Super quick. So there is those types of norms, and then there's things that are inappropriate. And clearly we have seen from the Me Too movement that too many people and too many men have gotten away doing really bad, stupid things, okay? And what happens is if you have a strong performing investor and boy, they're hitting it out of the ballpark, and they have been documented to, you know, I mean, we're talking sexual harassment, not, you know, how you talk about someone's dress or shirt. Sometimes there's a tendency, well, they're performing so well, we want to keep them. You cannot allow that practice to continue. That's just the bottom line. We have to surface it and address it, not put it under the rug across the board.
thank you. And being explicit makes a big difference. So thank you, Esther, Susan, and Kara. Let's give them a big round of applause.
All right, give our panelists another round of applause. Thank you, Susanna Vickers. It's a wonderful session. How many of you have enjoyed the conference so far? I can't hear you. Very good. There are some notable folks in the room that we all want you to make sure that they know they are here. Diana Reyna, our former councilwoman and the first Dominican woman to be elected in the nation, is here. Please stand. Rosie Van Vela from New American Alliance and Tom Soto, please stand. Orem Graves from the National Association of Security Professionals and Clarence Williams, where are you? Please stand. And Betsy from Accelerate Investors, please stand. These are our partners. We work with them all year round. If you think we've come up with bright ideas, it is not true. It is all their ideas. They come to us and they advocate on your behalf, and they make sure that we're doing the right thing today and always. As we said, this conference is about making sure that diversity is sustainable, that it is long-lasting, that it is past our administration, and that every time you walk into the controller's office, you get the respect and the merit that you deserve. You will be breaking out into sessions now, which is the best part, where we will be having breakouts in private equity, for hedge funds, for real estate, for MWB broker panel, and more importantly, how many of you are excited about speed networking? Raise your hand if you already are all signed up. Good. That will happen between 12